Hello everyone, this is Shooting. Today we're going to talk about Reddit. The online social media and discussion forum is about to go public with the initial public offering issuing later this March. Over the past weeks, we have seen so much news like Reddit has never turned a profit in nearly 20 years, but it just filed to go public anyway. Although it sounds like a shocking headline, the idea of going public with negative net income is actually not new. In fact, based on data compiled in 2018, 76% of companies and 83% of the tech businesses in the US were unprofitable in the year before their initial public offering. Well known companies like Amazon, Tesla, Airbnb, DoorDash, Lyft, Zillow, and many more all issued their IPO despite being unprofitable at the time. Some of them remain unprofitable to this day. I personally don't think this is a good trend, but it definitely reflects the reality of the IPO in the US market today. In terms of the length of time to profitability, Facebook took 5 years, Amazon took 9 years, Tesla took 17 years, and Toyota took 26 years before becoming profitable. Reddit is certainly on the longer end of scale in terms of reaching net income positivity, but there are businesses that has taken longer to achieve profitability and still proven to be successful. One reason profitability has taken much longer than before is due to the fact that actually for many of these business they actually had the opportunity to become profitable at some point, but they were more or less tuning their profit to a net zero. This allowed them to reinvest their money for maximum market expansion and enjoy some tax benefit at the same time. With the growth of tech business, venture investors these days prefer growth investment over demanding timely profits from their investments. Venture investors focus more on grabbing market share and achieving significant technological advantages against potential competitors before reaching profitability. Thus, more and more business opt to burn their initial years of revenue, bank loans, and VC investment for many years before opting for a profit. But a business can just survive forever without a profit. So, what marker should we focus on instead in the Reddit's case here? One significant marker we can focus on is the ratio between net income to revenue. Yes, they might be running at a loss, but for some companies, the loss is very tiny compared to its revenue. Amazon is a famous example of this. The company had enormous revenue compared to its net loss before reaching profitable point. It has the option to become profitable, but were more or less manually tuning their profit to a near zero level. Tesla's net loss has stayed in a similar but slightly bigger ratio compared to its revenue each year. Airbnb's net profit is the same, with a bigger net loss over revenue ratio than Tesla. A negative example is DoorDash. Even though the company controls an astonishing 57% of the market share, the company's net loss in 2002 was 1 to 6 ratio compared to its revenue. Of course, to truly understand the financial potential of a business, one needs to look into their COGS, their reinvestment strategy, and so on. Now, we will elaborate these in future videos. Looking at Reddit, its net loss over revenue is about a 1 to 10 ratio right now. It is not great compared to Amazon, Tesla, Airbnb, but they're not the worst. They're trying to close up the gap each year, and it has its chance to flip the scenario at any point. So the next big question is for Reddit, how could they flip their scenarios to have a positive net income? For a social media platform, that usually means increasing the amount of advertisement and sponsored posts. Over the year, Reddit seems not pursuing that path very hard. This created a very neat environment for the Redditors, but also made it hard to expand its advertisement strategy as their users had a specific low tolerance to advertisement and sponsored posts. Selling data is definitely another way to go and seems very promising for Reddit. In fact, based on their IPO prospectus sent to the SEC, Reddit says they have entered into certain data licensing agreements with an aggregate contract value of $203 million for 2 to 3 years. And they expect a minimum of $66.4 million of revenue to be recognized before the end of 2024. It is unsure who this large AI business is. People suspect it to be Google or OpenAI. The company previously didn't gain access for AI training purpose and has actually just recently changed its idea, saying that their data shouldn't be given away for free. Again, sounds like a very good strategy, but it's unsure what would be Redditor's reaction to a such act after the GameStop stock and its anti-shorting movement. No one doubts Redditor's smartness and their capability of controlling market trends and behaviors. So, what's your thought on Reddit and its stock's future? Comment it below, and I'll see you next time.